Jamie Block is back with us from the New York State Society of CPAs. Great to see you, Jamie.
Good morning.
So our topic is child care expenses. School finishing up, so summer camps are on tap. And for some families, additional child care responsibilities and expenses. Where do we begin in terms of trying to save a little bit of money in this regard?
Yeah, so the IRS has two key avenues that you can utilize for saving for daycare and summer camps and so forth. One is a flex spending account or flex saving account, FSA, and the other is a child tax credit.
All right, let's dive in on the FSA. A lot of people know them. A lot of people use them. Some people don't get the most out of them. How do they work?
Yeah, so how they work is you contribute pre-tax dollars through payroll deduction through your employer, and then when you have expenses such as your summer camp or daycare, you then submit for reimbursement those expenses to your employer or a third-party provider, and you get reimbursed for those expenses. What's nice is that you don't pay any income tax, state tax, Medicare, or Social Security on those deductions.
So there is a substantial savings depending upon how much you set aside. Is there a limit in that regard in terms of how much you can set aside?
Yes, so you can only do up to $5,000 for married filing joint, head of household, and single, and $2,500 if you're married filing separate on your tax return.
Does that matter on the number of dependents? That's a hard number?
That's a hard number.
It's not per child?
Correct.
Okay. Let's talk about the other side of the coin here, the child care tax credit. How does that one work?
Yeah, so what that is you have to pay, again, expenses for eligible institutions like daycare, summer camp, and so forth, and you get a 35% credit on those expenses, and the credit is actually $3,000 for one child or $6,000 for two or more children, and you get that when you actually file your tax return, so it's not as quick of a reimbursement as the FSA is.
Can you take advantage of both, or do you have to use one or the other?
Yeah, it's very tricky because you can't use the same expenses for both. It's double dipping, and the IRS kind of frowns upon that.
Sure.
So if you spend over the $5,000 in your FSA, then you can then utilize some of that for the child tax credit.
Okay, good to know. Final thoughts here, because it's a lot to weigh, and you got a lot of responsibilities in terms of camps and child care. If it feels a little overwhelming, what's a good step?
The best step, as always, is to contact your local CPA and talk with them and figure out what method is the best for you to claim, because you can do some claiming strategies that may work better one way than another.
For your individual needs.
Absolutely.
All right. Thanks, Jamie. Appreciate it.
Thank you.
So summer is here, and it's time to take care of those responsibilities as well. If you missed any of our conversation, we're sharing it online, as always, at rochesterfirst.com.